Well, Bobby, thanks for joining me again today. I appreciate it.
Pleasure.
Yeah, I mean, we've been both a little busy. We haven't been doing these as many as we should, and we'll get back to it starting next week. But today's, why don't you take over this real quick and talk about a few things, why you want to talk about today's show?
Okay. Yeah. So
hold on. I went the wrong.
That's okay. I'm still here. In a year, make $100,000.
Is that what people are thinking, that they're going to make that much money?
Well, people have friends that, bought a house last year and they're already up, $80,000 to $100,000. And so they're thinking they're going to do the same thing, sell the house, keep the cash, invest it. It's possible to do that. But I always say, that's pretty risky, but otherwise it's always a good time to buy a house.
Yeah.
Because if you're not owning a house, you're renting from somebody else.
Right. And I think the biggest question, like you brought up, people are asking, is it still a good time? If you look now at rents, right? I keep bringing up this one in Lathrop. It's an apartment complex, 1 bedroom, 1 bath for $2,200 a month.
Yeah. In Lathrop.
Apartment complex. I don't even know locally, but that's just the one I heard of recently. So the problem is rents are going through the roof. 1 in 4 houses that are being built today, single family homes, is being built to rent. Did you know that?
Yeah. And I think they're just so,
that is not normal.
Crazy. Yeah, no, it's not, because people see that, hey, they continue to pay these rents.
Yes.
We increase them by 20% every year and they're still paying them.
Well, because they don't have a choice. There are no houses are really being built. Yeah. And because I was talking to the mayor this morning at Rotary, and she's like, well, we're building all these. It's like, those are the ones been in place to be built for the last 20 to 25 years. We have all of a sudden, I haven't heard of any new stuff. If there is, please let me know. Yeah. But we need to build. Normally in Modesto, we're building 1,000 homes a year. We're at 100. Right. Yeah. And now we're in a market where we need more homes. We need 5 million homes nationwide, and we still don't have it. We need to build 2 million a year for a decade to get caught up, and we're just not there. So if you can purchase, you want to purchase. And what I mean, if you can, that means that, hey, it might not work for you right now because of your job, this kind of stuff. Well, with 11 million jobs out there, I don't want to be a jerk, but go find that job. I've had many clients recently who have went out and got different jobs so they could qualify for a home and are happier. Right.
Yeah.
It's the one time in history you can go there's so many jobs available that you could go get a different job, a better job. And that's why I'm losing all my staff. I'm just kidding. That was a joke. But so one thing I wanted to bring up, there's these Making Current Matters, that we sends us stuff all the time. And they were talking about what you can expect from the spring market. Right. Well, we're kind of in that spring market, right?
Yeah.
This is what we've been saying since last year, right? And with inflation, mortgage rates will continue to climb.
Yeah.
We moved up, a lot in the last, and I'll show this chart that's further down about rates and what has moved before. But we've moved up probably 1.25 points since, the beginning of the year, which sounds like a lot, but we're back to 2019 rates, which everybody loved 2019 rates.
Yeah.
Until 2020 happened and 2021 happened. And then now those were the horrible rates. So this is just what happens. Housing inventory, they say it's going to increase. I still think it's not going to increase. We did that one article. There's less and less people not wanting to sell, but are available to sell what they have because they want to stay in the house with those low interest rates. And I think there's less and less people moving out of state. There's still people moving out of state. I just think it's a lot less than 2 years ago and 1 year ago. And I could be wrong. That's just what I think.
Well, and another thing that I'm seeing is, there are some seniors that are looking to sell their homes. And oftentimes they're not even moving in with children. They're looking to move into like long-term care facilities.
Mm-hmm.
And the rates in those places have gone up too. If you need 24-hour care, like assisted living, it's like $8,000 a month.
Yeah. So you're better, for a lot of people, you're better off to stay in your house and hire somebody to take care of you.
Yeah.
And if you need, and a lot of them are doing that with reverse mortgages. They'll do a reverse mortgage and then use that money to help pay for that care. And so, and I can handle that. I'm just throwing it out there. But if you get help somewhere,
perfect time to plug it.
Yeah. So reach out to me if you need help with that. The other third thing that keeps house prices will continue to rise. They were talking that 1% in interest rates usually cause house prices to go, slow down a little bit. We're still seeing 1.1, 1.2, which is about 19% year over year right now for last month. I can find the numbers from last month and show you that we're up 19%, which is huge.
Kind of tie into what I was just talking about as far as like seniors selling their homes.
Yeah.
One thing to think about, obviously if you have kids that live in the area and y'all get along, Lord willing, taking some of that equity from the sell your house to build an ADU, because as we talked about in previous show, they've made it much easier as far as the permitting process and everything like that. There's not as much red tape to build an accessory dwelling unit. It's say like your child's house.
Right. But one thing you have to be really careful, and you have to look at what your capital gains is going to be when you sell that house. Because if you've been in that house a long time, say 30 years, I don't know what your numbers is. You just talk to your tax person before you do anything to make sure you're not going to have an issue like that, because some people are running into that. All right. So this is that chart I wanted to talk about. So we're going to go back. If you look in October 1993 to December 1994, there was a 2.38 increase in interest rates. Home prices still appreciated by 3%.
Yeah.
January 96 to September 96, that was 8 months, went up 1.2%. Still, house values went up 2%. This is the October 1998. I was in this market to May. 19 months later, prices went up, interest rates went up 1.181%. So we're probably talking 6% interest rates at that time, if I remember right, versus where, 4 something, 5%. And the house prices still went up 13% year over year. Same with June 3rd to June 4th, the 2004, that 1 year period, rates went up a little bit. House prices still went up. So what's this saying? Just because our rates went up right now does not mean the values are going to slow down. The values of house increase is going to slow down. It's not going to happen. We're going to still see this appreciation happening. We're going to still see people buying homes. You're going to still see that happening out there. But what it will do is take out, if you were used to 24 offers on a $400,000 house in our area, you're going to get down to 14 offers or 8 offers, which is not a bad thing. It makes it a lot easier to get into houses and get into things like that. So it's not so bottom line, what's going to happen? We're going to see mortgage rates continue to rise. Home selection supposedly will be more of it. I don't know if that's true. And house prices will continue to appreciate, just they said at a slower pace. I don't see that still. I still see it going up.
Yeah. When obviously they're looking at all over the country, right? We're such an anomaly, this market, it seems like pretty much every prediction they make for a market doesn't apply to any of the
when they're
states.
talking those numbers, they're talking nationwide. So we don't ever do anything nationwide. We do things crazier than nationwide. So so you're right. That's just unusual for what we're doing,
Well, and the Central Valley market is directly affected by the Bay Area market. So that's a whole nother factor that comes into it, as long as the rates in the Bay continue to go up and they're crazy and people can't afford to live there, they move down to the Valley. And, Tracy's become an extension of the Bay Area as far as, rates and things like that. So now people are flooding into Manteca. Manteca's getting crazy. Now they have $1 million homes in Manteca, which is something I never thought I'd see.
Dude, we have $1 million homes in Modesto. So why wouldn't you see them there?
Yeah, because that's where I grew up. So I have a bias to it. It was a farm town when I was a kid.
Right. So, what are you going to do? You know what I mean? It's just the values are here. We're going to continue to keep going. We're in a unique situation where most of the time we've seen things go the complete opposite. I'm pulling up a chart here as I'm talking. I don't know if you know that's what I'm doing, but anyway.
I can see it. Yeah.
Can you see that? I'm looking away from you.
Yeah,
that's why I'm so rude. Everybody asks, why are you so rude when you look away? It's not that. I just want to get these charts. So basically, Case Shiller came out, right? So January previous, and now you look annually, year over year, 19.2% we went up, right? And if you look at the top cities, you look at San Diego went up 2.5% in that month. San Francisco, Tampa, Phoenix. Look at that. Phoenix annually 32.62. That's just huge numbers. And then if you look at the other housing where the all over the country, it's still appreciating everywhere. You would think that and back over here when we're like, okay, well, everybody's leaving California. Really? then why is San Diego appreciating that much in a month? And why is San Francisco appreciating that much in a month if everybody's leaving California?
Yeah.
So I just want to let people know, yes, we still have people who can't afford, people are leaving the state of California. One are retirees, people who can't afford to buy a house. They're moving elsewhere to have a better life in their eyes. But it's still going to be this way for a while. And what's happening is you're going to now move to a state like you can't move to Austin, Texas, because the average home is $1 million in Austin or more, right?
Yeah.
It's the Bay Area of Austin. So Texas, a lot of people are still moving, but there's already been the appreciation from what California has done. Yes, our houses went up too, so it's really pretty much the same thing, but you just have to really look at where you want to live, and if that's really the reason you move is because of where that kind of where you are in your life, and that's just the way it is.
When a lot of folks that that did move, moved to the right time, people are thinking about making the move now. You kind of missed that opportunity because the markets have caught up. So many Californians have or people from other states have just moved all over the country, and we've driven the rates up.
Right, but we can still California went even higher. Think about it. And so you can still sell your house here and then that cash go buy something there. You might have a small loan on it now, where before you'd have no loan on it. So you can still do it, but you really have to look at, is that where you want to live? I mean, because I just recently saw 2 tornadoes in Texas, golf ball hail in Texas. I mean, it's just what you want to live. Texas also has, and you really got to look at the numbers. Texas has 3% property tax. So on $100,000, that's $3,000. California has 1.25% on average. Can be a little less, could be a little bit higher if you have Melrose. So 1.25% that's what's that? $1,250 on 100,000 versus 3,000 on 100,000.
Yeah, I mean, it really depends. If you're moving out of state to save money, that's probably not going to be something. I know we kind of turned in a different show.
No, we're just talking about in general. Is it a time to buy? Yes.
Yeah.
Wherever you can buy, you should be buying your house, because that's how you build personal wealth. That's how you get your generational wealth changed. Your family's. Yes. Don't pay your landlord's mortgage. Pay yours. That's the show. We just added some extra stuff.
Yeah. Well, and like you said, 1 in 4 houses being built now are being built to be rentals. That means eventually, at some point in time, they're going to hold all the cards, and unless they decide they want to sell these rentals, to individual homeowners, you're not really gonna have a choice. I mean, you might be able to rent a home, but
yeah, well, that's someone just bought, a whole, I don't want to say subdivision, but basically they paid $10 million and bought all these houses at one swoop, and they're all going to be rentals.
Yeah,
there's homeowner tracts right now being built just to rent. That's telling you there's a market for people renting, because the fact that they can't find a house to buy, so they're going to rent. You need, if you can't work with us, get them to a mortgage person so they can see what you can afford. And if you can't, they can tell you how to be able to do it. This is what you need to do. Pay this one off. Or, hey, you're at $25 an hour. You need $27 an hour to be able to afford this house. So that's what you should go focus on. That's what we do. We look at those numbers, tell you what you need if you can't do it right now. The no is just not today. It doesn't mean you can't down the road. So we just get you ready, put in place for that. It is much harder if you have a home that, there are programs out there where companies are buying that house for cash for you. And then they're doing a loan afterwards on that house that they pay cash for you, but you're not getting the full value of your property when they do those kind of things. And you're giving something up to get that. Right.
Exactly.
So nothing's for free in this world. Right.
No, not that I've found so far, man.
Yeah.
If it's free, someone else is paying for it.
Someone has to pay for it.
Yeah.
Yeah. So, overall, what we're saying, yes, go buy the house. It's still a good time to buy. Rates are still overall low compared. I mean, because if you look in the 80s, we had 20%, 18 to 20% interest rates. If you look in the 90s, you had, between 4 to 6% interest rates. We're still in the 4s. Right. In general.
Yeah.
Right. Where, it depends on your FICO score and what program and how much down and all blah, 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 APR and all that. Just throwing that out there so I don't get sued. So rates are still really good, but people are they're looking at, I could have had a 2 something. Stop saying that. You don't know. Right.
Yeah. Yeah. Or, when say someone gets pre-qualified and it, takes you a few months to find them a house, rates have gone up. Like you said, still, I don't know. My loan I got back in 2011 is 4%, and that was good back then. So
Right. And we're 2019 rates, right?
yeah,
Now, going into 2018, that's still great rates. It's all about long-term over when you get into the home, what you're going to do. We're going to hit a recession in a year or two, and then rates will drop and we'll have to refinance you. Horrible stuff. But by then you'll have had, equity built up, and you'll probably get a 20% down refinance and get rid of all your mortgage insurance and a lower rate and save money. So don't worry about it. It's a long-term plan to get in here where your rental will go up whatever max they can have you go up each year, because they have to by law, because how California is now with the rent. So you're going to go, is it 20% appreciation on the rent?
5%,
5%.
and a maximum of up to 7% if you can.
All right, so 5% a year. So if you're at $2,000 a month in rent, that means your rent's going to go up $100 at least every year.
Yeah, and I mean, if your employer isn't keeping up with the cost of living and giving you increases, then before you know it, you're going to be just a permanent renter because you're not going to be able to afford to buy a house.
Right. So that's, again, back to go back to school, do what you've got to do, get a better job, get it for your family, build up, and so that you can buy a house and you can have a better life.
Yeah.
All right. Thank you guys for watching this. And if you like what we do here, just subscribe and follow and let us know. We appreciate it. Thank you. Thanks, Bobby, for being here.
Thank you, Ed. I appreciate it.
Anytime.